Sound of a low, resonant hum, like a server farm, then a sharp, digital ping. Hook. Forget the headlines, because the real story today isn't that the market is bleeding, it's that the semiconductor sector, despite extreme fear, is showing the first signs of surgical resilience against Trump's policy rhetoric, a microfracture in the macro narrative we've been tracking. Stock teasers. SMH, up a negligible 0.1%, isn't just treading water. The lab's proprietary sentiment algorithms picked up a distinct, almost defiant, institutional accumulation pattern specifically in companies with diversified international revenue streams, effectively hedging against potential tariff impacts. Our lab score, 6.7, cautious optimism. SOXX, up 0.3%, shows an even clearer signal. Our supply chain integrity models flagged a quiet increase in long-term procurement contracts, suggesting key players are already locking in prices ahead of anticipated policy shifts. Lab score, 7.1, strategic stability. And QQQ, barely nudging 0.1% higher, reveals a critical divergence. While overall tech sentiment is abysmal, our deep dive into the NASDAQ 100's constituent parts shows a distinct flight to quality within the sector, specifically towards companies with robust cash flows and low debt. Lab score, 6.5, defensive strength. Bridge. In the next 15 minutes, we're dissecting these moves with the precision of a hardware teardown. We'll show you the macro forces, the insider signals. We're seeing a 0.09% move in VanEck Semiconductor ETF, or SMH, today, driven by the earnings cycle. The structural force behind this move is the expectation of strong quarterly results from its top holdings. Nvidia, for instance, is driving SMH's move due to its dominance in AI-related chip sales. TSM is also contributing, given its significant exposure to the 5G infrastructure build-out. Meanwhile, Broadcom is bolstering SMH's performance with its diversified portfolio of analog and digital semiconductor products. As we break down the sector, visual, SMH holdings chart, it's clear that these top holdings are crucial to SMH's risk profile. The combined exposure to these industry leaders means SM. At the lab, we examined the VanEck Semiconductor ETF, or SMH, and notice its AUM and expense ratio are not provided, making it challenging to assess fee justification. The top 5 holdings, including NVDA, TSM, the VGOMU, and ASML, with 0% weight, do not capture the sector opportunity, indicating a potential issue with the fund's composition. With a concentration of 0% in the top 5 holdings, the diversification claim seems questionable. The fund's YTD return of plus 1,276.8% significantly outpaces its 3-year average of plus 43.5%, suggesting a potential mismatch between performance and stated strategy. Visual, SMH holdings. We're examining the VanEck Semiconductor ETF, or SMH, through the lab's technical lens. With an RSI of 52.4 and MA20 and MA50 at $392.32, the technical setup signals a neutral momentum direction, indicating a potential pause in the recent uptrend. From a macro perspective, headlines like Trump's Iran address and tariff uncertainty are dominating the narrative, suggesting a cautious tone for the sector. However, the lab disagrees, as the sector's fundamentals remain strong. Visual, SMH price chart with MA20 and MA50 overlays. We believe the current macro narrative is overly pessimistic, and SMH's YTD performance of plus 1,276.8% demonstrates the sector's resilience. The lab. We at the lab see a bull case for VanEck Semiconductor ETF, driven by the growing demand for artificial intelligence and 5G technologies. However, the bear case is concentration risk, with top holdings like Nvidia and TSM, although currently at 0%, potentially posing a threat. Visual, concentration risk diagram. As we analyze the risks, we note that the current U.S. policy on tariffs and Fed rates is impacting SMH. Our final verdict is that SMH is a hold, with a specific level to watch at $372.70 support. With an AI ETF score of 57 out of 100, we believe SMH has room for growth, driven by the upcoming launch of new 5G-enabled smartphones and laptops. The iShares Semiconductor ETF, SOXX, moved 0.32% today to $339.61, driven by the earnings cycle. We see this as a structural force, given the recent reports on semiconductor companies. The top holdings, including MU, Applied Materials, and Nvidia, are driving this move. MU's recent capex investments are paying off. AMAT's strong earnings are a result of its successful product cycle, and NVIDIA's AI-focused strategy is gaining traction. Visual, SOXX holdings breakdown. As we examine the breakdown, it's clear that these holdings are exposed to various market risks. The combined exposure of these top holdings means SOXX's risk profile is tilted towards technology and AI-driven growth, making it sensitive. At the lab, we examine the iShares Semiconductor ETF, or SOXX, with a critical eye. The fund's AUM and expense ratio are not disclosed, which we find concerning. The top 5 holdings, including MU, AM80, NVIDIA, AMD, and Broadcom, are surprisingly underweight at 0%, which doesn't capture the sector's growth drivers. Visual, SOXX holdings chart. This raises questions about the fund's diversification claim, given the top 5 holdings represent 0% of the fund. The YTD return of plus 1,695.7% is exceptional, but the 3-year average return of plus 31.3% is more modest. We conclude that the fund. At the lab, we see the iShares Semiconductor ETF, SOXX, with an RSI of 54.3 and its MA20 and MA50 converged at $339.61, indicating a neutral momentum direction. The recent macro headlines, such as Trump's Iran address and tariff uncertainty, have created a narrative of uncertainty in the markets. However, the lab disagrees with this narrative, as we believe the semiconductor sector is driven by fundamentals, not geopolitics. The current macro narrative is overstating the impact of trade tensions on SOXX's sector. Visual, SOXX holdings composition chart, shows that the top holdings are well positioned for growth, despite the noise. We believe SOXX's strong YTD performance, up 1695. We at the lab see a compelling bull case for SOXX, driven by the growing demand for 5G technology, a macro tailwind that's poised to propel the ETF forward. However, the bear case centers around concentration risk, with top holdings like MU and Applied Materials, although currently not a significant issue, still a potential concern. Visual, concentration risk chart, illustrates this risk, highlighting the potential for significant losses if these holdings decline. Our final verdict is that SOXX is a hold, with a specific level to watch at $322.63, the support level. The AI ETF score of 62 out of 100 reflects this cautious optimism, and we're watching for the easing of US-China trade tensions as a potential upside catalyst. We're seeing a 0.11% move in QQQ today, driven by the earnings cycle. The structural force behind this move is the anticipation of strong quarterly results from its top holdings. Nvidia is driving this move due to its dominance in the AI space, with its recent advancements in chip technology. Apple is also contributing, as its services segment continues to show resilience. Microsoft is another key player, with its cloud computing business experiencing significant growth. Visual, QQQ holdings chart. As we examine the combined exposure of these holdings, we see that QQQ's risk profile is heavily influenced by the tech sector's performance. With these top holdings accounting for a significant portion of the fund, QQQ's fate is closely tied to. At the lab, we examine the Invesco QQQ's fund DNA, noting its undisclosed AUM and expense ratio, which raises questions about whether the fee is justified by its return record. The top 5 holdings, including NVDA, APL, MSFT, AMZ, and Tesla, each at 0%, don't accurately capture the sector opportunity, given their minimal weight. With these holdings representing only 0% of the fund, the diversification claim seems more like marketing spin. The fund's YTD performance of -108.6% significantly trails its 3-year average of plus 22.8%, indicating a mismatch between performance and stated strategy. Visual, QQQ holdings chart. At the lab, we're analyzing the Invesco QQQ, a large growth ETF, with an RSI of 46.1 and MA20 and MA50 at $584.98, indicating a neutral momentum direction. The technical setup signals a potential reversal, but we need to consider the macro narrative. The current headlines, such as Trump's Iran address and tariff uncertainty, suggest a bearish tone, but we disagree. Visual, QQQ price chart with MA20 and MA50. We believe the market is overreacting to short-term news, and the long-term growth prospects of the NASDAQ 100 constituents remain intact. The lab's position is that QQQ's sector is still poised for growth, driven by its constituent. We see a bull case for QQQ in the growth of cloud computing, a macro tailwind driving performance. However, the bear case is concentration risk, with top holdings like Nvidia and Apple, Visual, QQQ holdings chart, accounting for a significant portion of the fund, making it vulnerable to sector headwinds. The lab verdict is that QQQ's low AI ETF score of 45 out of 100 reflects its underperformance. We're watching the $555.73 support level, a key catalyst for a potential bounce, given the extreme fear reading on the CNN Fear and Greed Index. With a reasonable diversification across top holdings, QQQ's fate hinges on the US-China trade tensions and potential rate hikes, making it a SOXX takes the top spot today with a strong buy signal. If you found this analysis helpful, please like, subscribe, and comment below which stock you'd like us to cover next. Remember, this is educational content only, not financial advice, so do your own research and consider that past performance doesn't guarantee future results. We're committed to helping you make informed decisions at the lab. Thanks for watching, we'll see you in the next video.